And N Jayakumar, MD at Prime Securities, joining in the studios right here. Jakes, good morning. Great to have you in the studio. How are you sussing the mood? What's happening in New Delhi? Whether something is going to come or not? Because even the market is now giving up hope on whether or not there's going to be a stimulus.
Well, I think we should, the mood is there for everyone to see. I think this has been so clinically analyzed by everyone.
Yeah.
And even when I was here last week, kind of focused a lot on the problems at hand. And, everybody's aware what's happening. I think animal spirits are plummeting to new lows, as it were. And really, the fact is that it's not that money has disappeared. It's that nobody, even with money, wants to do anything. So that's the short. I have a little quip on this, that when interest rates are collapsing the way they are, and I expect it to fall even further because that's something that the government and the RBI want, transmission. And where internationally, 2/3 of the debt are in negative territory, you would actually expect a queue of Indian borrowers to stand there and have capex aspirations by loading up debt, because at the end of the day, debt adds to, or sensibly taken debt and used for capex adds to ROE. Return on equity is enhanced through debt on balance sheet. So debt is not a bad word. You need debt for a whole bunch of things. So when debt interest rates are collapsing, you'd actually expect animal spirits to be at the highest. And it's a point of huge introspection that the biggest company in the country, the biggest group in that sense, which is the Reliance, Reliance Jio and Reliance Retail, etc., the conglomerate, actually goes out and says that in the next 18 months, we want to be debt-free. Means, conceptually, is that if that is not the greatest telling statement of our time, that they want to actually reduce debt, which means, and if adding on debt is meant to be animal spirits, then if this is not a telling commentary on what's happening, nothing else is. But so much further, this is known, but this is like a documented proof that. But
not everyone buys the fear, right? It's great on paper, we all know, but not everyone goes out there and does it.
No, but the idea I'm saying is that you would expect actually more risk-taking at the times like this, where India is supposed to be the island of, the safe haven, the oasis in a desert, as it were. So let's see, and I think the focus should really be on what can be done without two things happening. The government is very clear, and probably rightly so, that the fisc is sacred, the fisc is untouchable. And there is little room there to actually do anything about it. So number one, we must assume in any discussion that the fisc now quite clearly clarified, and notwithstanding the subtext of whether a package for economic stimulus has gone up or down or whatever, I think the reality is there will be no package, and we must assume life without a stimulus. Number two, we should not expect any handouts from the government, because that I think is,
You've made up your mind on that.
Well, I think it's logical to assume that. And I think as you must plan your life on the basis of these two things happening. And if that happens, then what suggestions can actually help the country as a whole, sectors, which is not violating these two principles, that no free handouts and no economic stimulus in general. So the two sectors that are clamoring most, we hear about the auto sector, for instance. Most of the companies there are cash-rich companies. You take a Bajaj Auto, you take Maruti, they have tens of thousands of crores of cash on their books. The CEO, the promoters in Bajaj Auto actually come out and say there's an inventory adjustment that will happen. They don't really want. So all they are saying is don't make don't make life difficult in an environment which is already difficult, which I understand, which means this entire business of increasing, road taxes, etc. in certain states and so on and so forth. But is there an inventory adjustment problem? Yes, but that is not structural, it's cyclical. I have no doubt in my mind the next few months the inventory adjustment will take place. Dealers have been pumped big time in terms of the inventory over the last few months, and that's actually taken on a form and shape where they're not able to get refinancing. So does the auto sector need a huge economic stimulus? I'm completely opposed to it. I don't think you need to. So let's actually cut out, from my perspective, very clear, you don't need that there. Because the sector has cash-rich companies. So in good times, they made the cash. They'll make the adjustments.
And use it
at times like this. Number two, do you have a sense that FMCG companies, consumption demand, that's the other sector that people talk about? The reality is you take any of the top 4 or 5 players, whether you take Nestle, you take Britannia, you take any of them, they're talking about raising prices. Does that talk about, most of them have higher post-GST margins than pre-GST margins. This is well documented. Take their EBITDA margins pre-GST and post-GST. The post-GST is higher because there is tinkering going around in terms of SKUs. So they are able to reprice products. Old products get phased out. So the reality is their margins are higher. So if margins are higher, they are zero debt companies. What sobs do we need for the consumption? There is adjustment going on. That will happen. The reality is that wages have actually dropped and have been coming down periodically because private sector capex has just not taken off. And we need to make sure that private sector capex takes off. So the suggestions that I have will focus around how private sector capex can be enhanced. The first thing there is the equity markets today. The government is the biggest issuer of equity. The primary markets actually has morphed into the secondary market. These are offerings of sale. And see what has happened. The entire top 15 PSU basket of stocks is going at between 5 and 12% dividend yield. I mean, that in a country where debt rates, risk-free rates are half that, I mean, that's a joke. There is no reason. So the government actually has been focusing on selling in a market where at every stage, whether it's a mutual fund, whether it's an insurance company, EPFO, and the biggest hurt in this is the government with their residual holdings. Coal India, they started selling at 350 or 400, the price is halved. The dividend yield is doubled. I mean, what are we talking about? Why do you need to keep selling? In fact, I'm suggesting something dramatic. The dividend issuance from these companies can actually be stepped up with a clear statement that no divestment for the next 18 months. So the entire divestment target, we can prove it literally, in the absence, shortage of time, I don't want to get into that, but literally take the top 15 companies, double the dividend payout, you can actually generate more in terms of three things. The residual market cap of these going up, which means it benefiting the small investor, mutual fund holder, SIP investor, etc., etc. And more importantly, making them more attractive for people to look at, because divestment, the overhang on the thing just disappears for 18 months. You wait for a better time to do. Dramatically enhance strategic sales. What are we sitting and tinkering at the margin on whether Air India should be sold at what price? Dump these things where you don't need to be there. The MTNL and BSNL have been reduced to dust virtually. Eliminate these so the overhang disappears. If you see employment in terms of the public sector, virtually has not increased over the last 15, 20, 25 years.
And so one is desire on disinvestment. Second is will, and third is ability. So the desire may be there, but the ability and the processes are stalling it. I mean, Air India, nobody wants to buy, unfortunately, because it's become such a large thing. BSNL, MTNL are only left with land parcel, and even though they were monopoly businesses at some point in time.
I'm saying monetize them. Today we are trying to be cute at the edges. We don't need to be. Again, any suggestion given, does it violate the fisc in any manner? Is there a handout of any kind? No. If it is not, can it be done in terms of easing the government's responsibility on various things? I'm actually of the opinion that things like oil prices, as oil prices decline, as diesel prices decline, the government revenues out of that through taxation can actually be enhanced.
But they've done that. Excise duty has been continuously going up.
No, and I'm saying that probably is the way to address it, because let's be clear. In this year, you're going to have a lower direct tax collection. You're going to have a lower indirect tax collection. So how are you going to offset these? So purely looking from a government perspective, and I'm pretty sure about one thing, whatever the criticism might be, it isn't as though the government is unconcerned. Whether they have done adequate, we can debate that. But it's not that they're unconcerned. I think they hear what is being said. So can you give suggestions which actually don't violate any of these? My own assessment is a divestment idea, for instance. Just say 18 months, we will not crowd out the private sector raising money through the primary markets. Just go off the divestment, because these are all going at absurd, at these dividend yields. You actually should be a buyer of your stock.
But they've been unable, to be fair, they have tried with Air India, they've been unable to do it.
So Air India is one example. I'm saying there are a whole bunch of things that can, if you're saying land parcels in MTNL and BSNL, monetize the land parcels. The companies have become decrepit in any manner or shape. So the reality here is, if you expand dividends, you're actually putting money back into the capital markets, including the government hands, the divestments and other holders, rather than squeezing the hell out of those stocks. That is as far as...
I completely disinvestment with this kind of a mandate is the easy way to, or perhaps it's the only logical way how you can thread the needle. I mean, the problem is that. But before we move on, I just want to understand this entire fisc part. A purist would say, don't bust the fisc. Very, very, very important. It's sacred, so you're committed to it. But these are extraordinary times. When I say extraordinary times, because we are going through what could be called as a painful cyclical grind and a restructuring in the economy because of IBC, GST and demonetization. If the fiscal is compromised by 10 bips, 15 bips, 25 bips, that's not going to hurt anybody.
So my response to this is there is no sense trying to keep, there is a certain orientation that the government, and we should respect that. For a variety of reasons, they're saying this is non-negotiable. And there are a whole bunch of people who agree it is non-negotiable. So why try to convince them against it? I'm saying leave that out for a moment. Leave the fisc as is and try to see within those constraints what can be done. I'm saying whether 3.3 or 3.4, etc., you may argue rightly so. Some may argue the other way, that it's not, but the direction that this is taking. I think it's been proved time and time again that direct tax cuts go into the hands of the consumer, increasing spending power, etc., etc. Indirect tax cuts actually go to the companies in between who reprice products and increase margins or whatever. So if that is in the orientation that we have, I personally think sectors that are crying for help today are cash-rich sectors, so let's leave that out. The sectors that need help, and I think we need to focus on that as much, is the banking and the NBFC.
That's a great point. Just say it again, that sectors which are crying for help are cash-rich sectors, which is autos. Autos don't have debt. Tata Motors, I'm keeping it separate.
He talked about Bajaj Auto, Maruti.
Maruti has close to 25 or 30,000 crores of cash in the balance sheet.
Bajaj Auto, 25,000 crores.
So, I mean, what are you going to help those companies with? Those promoters are buying back their own stocks in the market. I mean, the Bajaj Auto, I've seen disclosures that indicate that. So the point I'm trying to say is the sectors that need help, where there's been, now you can say the NBFC space grew aggressively. It did. That's true. In a particular regime where it kept getting capital, which is debt capital, it also raised equity and it grew. That model has come unstuck to the extent that today it needs a marriage of two things. It needs equity capital, which is not available in India, from overseas. It needs overseas equity capital and domestic debt. Domestic debt, we are awash in debt. We don't know where banks should lend. I can tell you of PCA banks that are sitting on 50,000 crores of cash, don't know where to lend because the ability is there, but the willingness is not there. We talked about it last time.
Yeah.
Now I'm saying, give them the willingness by expanding the equity base of these NBFCs, and I add private banks in that. So what is the constraint to this? So I'm suggesting a simple thing. Open up a 1 year or a $10 billion window. The window simply says, $10 billion, up to $10 billion or a year, overseas equity will be allowed in this thing with a fast track approval of 15 days. We'll cut through the entire riffraff of approvals. This equity, if held for a period of 5 years or more, will have a, for instance, 5 or 10% tax cut. You're not changing the fisc today, but you're incentivizing money to come in. So it's like the stimulus coming in from overseas this thing. I can tell you today, the top 15 NBFCs have set up distribution structures, recovery mechanisms, and a franchise that can get $10 billion coming in literally in 6 months. I'm privy to 2 or 3 deals of this kind that can happen literally tomorrow, but they're going through this convulsions of, what will banks do, what will equity do, what will other lenders say, etc. I think if it needs a surgical strike, it needs to be done in this manner. Allow overseas equity and give them a 5 to 7% tax break. You will have money coming in 5 years or more. Identical for the real estate space. For the 20-30%, what is the characteristic of the two spaces? They are low on equity, they need help,
lack of funding.
Demand is an issue. And number 2, the moment debt or equity starts sloshing around in the system in private sector hands, the risk taking actually starts coming in because the businessman believes that there is a flow of money that is starting. So again, is a link to that. So real estate, for the 20% or 30% last mile completion, dispense with all FDI norms. Don't ask for minimum investment. Just get any money coming in up to $10 billion over a year. Because when you see incomplete structures, you see them looking like ghost towns. People look at it and say, who's going to invest in this? Because yahan to matlab milega hi milega apne ko. And prices will keep coming down. So sentiment then becomes an absolutely downward sloping, down a slide which is uncontrollably negative. So I'm saying just get projects to be completed brutally. Every project that's there, just get them to be completed. Once completed, with all the trappings, etc., at some point in time with interest rates also coming down, financing becoming easier based on the NBFC thing that we talked about, you're going to have demand pickup. I repeat, money is there in the system. The inclination to spend has just disappeared.
Absolutely.
Which we call animal spirits. So whether it's the case of whether it's the case of an industrialist or it's the case of an individual, that is as far as this is concerned. Now, I'll give you a simple example. The example of Dubai. Dubai only moved on something called a post-dated check culture. The industrialists gave post-dated checks, they gave it to the suppliers, they gave it to onwards, and the entire moved on the concept of the post-dated check. The subtext was, the moment a post-dated check gets dishonored, you get arrested. So the moment the downturn came, literally as checks started bouncing, people just fled the country. And it became a ghost town with incomplete. Identical here. The RBI introduced the one-day delay, a one-day default concept, which means that if there's a bond delay or by 1 day, it's a default, you move from a AA to a D. If there is a bank default, you have to flag it off, go into restructuring, ICA, etc. That 1 day default is the equivalent to the post-dated check. It's actually creating a panic of a kind where mid-market is not able to access it. Because once I term you a defaulter, is anybody going to lend you? Even if it corrects itself in 15 days. So I think that is one correction I'm actually saying, that you need to go back and get into this thing. So rather than just brand everybody a defaulter. So suddenly the mid-cap space has just collapsed because nobody knows whether somebody will survive or otherwise. That's the other sort of recommendation that.
Sure. But I just wanted to figure out, okay, you've given us the means to go about with the surgical strike, what to do with the haves and the have-nots right now within the market. But is the price already adjusting? Is the market already working with an assumption that there will be no stimulus, or is the market somewhere still hopeful? Are we bound to see more downside once the market believes that there will be no stimulus? They will have to do it on their own.
I think market in most of the stocks, other than the index stocks, is pricing in bankruptcy. In fact, it's pricing in bankruptcy in many index stocks, which is actually the biggest paradox or the biggest joke in a sense.
So we've seen the worst, you're saying?
I think from a price action, because people are now absolutely unanimously bearish, capital markets, think ahead of everyone else, and they're more ruthless than you believe they can be. And I think the prices indicate ruthlessness. Okay, Jakes, we've had a very engaging conversation. Very few people have come out in the open and admitted there's a problem. Now that we've identified problems, solution finding is the only way to go. Let's hope next time when we meet, what we are discussing will finally see some motion and some action. So I'm an optimist like you, and I'm hoping that these are dark days and this is the darkest days before the dawn. And I would like to end this on a slightly not shero-shayari note, but literally, I think everybody should realize that apna dil bhi utna hi dhadakta hai jitna dusron ke liye, for India, right? So it's true. And I think sometimes when we get emotionally charged about this, it's because we really have been in the sector for the last 25, 30 years, and you see a crying need that you can do sort of largest kind of deals, and it still can go out and benefit. It's possible. Of course it's possible. I mean, I tell some of our common friends, it's not about markets, it's not about your wealth going up and down. That's like an NAV. But it's about when you feel frustrated because you see a potential, and when the potential is not being unleashed because somebody is, in a sense, not being able to acknowledge it, or somebody is just not willing to do it. So that is the sad part. I mean, the potential is there, the solution is there, but action needs to be taken. I'm hopeful it will be done, and I'm hopeful that those who have to hear it will hear and respond. I have no doubt.
Thank you so much for joining us.
Thank you.